Hello everyone, this is Dare here. Hope you are well. Yes, so you know about the whole moving average indicator that we have been talking about, and then we know about the Heiken Ashi we have discussed as well on this channel. So the purpose of today's video is to bring these two indicators together, the HMA and the Heiken Ashi, and then we will use this opportunity of combining the two to trade. So at the end of this short video today, you will be able to set up your platform for those two indicators, the HMA and the Heiken Ashi. You will be able to identify where to buy. You'll be able to identify where to sell, and also you'll be able to place your stop loss and take profit target. So at the end of today, you will have one more trade strategy in your locker to use. So this is going to be one of those strategies that you can use. So I will say play around with this strategy and see if it works for you. Why I love this indicator is that they are honest indicators. HMA is a very precise but also honest indicator. It's very close to the price, and this curveness is also very smooth. Okay, right, so let me describe this strategy to you. So on my screen here, this of course is Euro-Dollar daily charts. So it's a Euro-Dollar daily chart, and we have HMA. It's HMA whole moving average, the one that you have already. By the way, if you don't have it, you can email me. You will get your copy. It's free of charge. Right, so on this HMA, we have the price to be 0, period is 50, percentage filter is 0, color is 1, alert 0, no alert. Okay, if you want to be alerted, you can set this to 1. Okay, look at the color. Blue is for bullish, red is for bearish. The yellow color is just intermediary, which is not actually used, but these two colors are the most important. Okay, so that's how we set our HMA. The most important thing here is the 50 all moving average, 50 period. All right, 50 period moving average. Now let's look at the Heiken Ashi. Heiken Ashi on its own do not have any numbers. There's no period on it, it's just colors. So we set our color as well to red for bullish candle, red for bearish candle, blue for bullish candle. Okay, so notice that the colors for the HMA, bullish is blue. The color for the Heiken Ashi bullish is also blue. So if you are going to set your color, make sure those two color matches. It could be any color you prefer, but make sure they both match. HMA bearish color is red, and the Heiken Ashi bearish color is also red. You will see the reason why now. Okay, so now you have these two indicators on the chart, and you have your screen. So how do they work? First thing I will let you know is, if you can remember this line, it's very simple. Trade only when the color matches. When the color of HMA matches the color of Heiken Ashi, trade. When the colors are not matching, when the two colors are different, no trade. It's as simple as that. So if you remember that, you will not go wrong. So watch out for the colors. Okay, so let's take, for example, we start from the beginning of this chart. See, it's a blue candles of Heiken Ashi, blue. So all over here, we could say we are in a trade, but let us say we don't know when this trade started, so let's start our own trade. Now we get an opposite red colors. So all over here, we cannot trade because this red color disagree with the yellow with the blue color of HMA. So HMA and Heiken Ashi disagree. But look at this next bar here, this next blue bar. This is when both colors agree together. Right. Now they are in agreement. After the close of this particular candle, now you know the color matches. So what you do is to put on your buy position. So because we know we are buying. With blue color, we are buying. With red color, we are selling. Okay? The color must match. So here we got a matching color. So let's put on our trade. So the bar closes at here. So we put on a buy order, market order at the close of this candle. So this is a daily chart. It means you can spend only 2 minutes in a day to trade, or maximum 5 minutes. So you come in at the beginning of the daily chart. Look, does the color match? If the color match, you put on your trade. So let's say we are putting on a trade. Let's use this color for our trade. We pick up this color here. So this is exactly where the market closes there. So that's your trade. Where do we put our stop loss? Stop loss will be just below the last swing low when you are buying. Just below the last swing low. So this is our stop loss. So let's put our stop loss to be red color here. Stop loss here. Where is going to be your target? Right. So now you don't actually know where your target will be, because here you're entering the trade here. You need to zoom back a little bit to get your target. You might want to use this because your target will be the last known resistance level. Last known resistance level. So if you are a conservative person, you will probably use this as your last resistance level. As you can see, it is your last resistance level. So you could check this, right? So this is about 1-to-1 ratio, which is not perfect, but it's manageable. So you could check this trade. So it means you will enter here. You can see that the trade never touched your stop loss, and you hit your target. Okay, so you hit your target here. Your target of how many pips? About 94 pips. Stop loss of about 85 pips. So that's about 1-to-1 ratio. So you make 95 pips on that trade, and then you wait again until the color change. So when the color change and you are back to the same color, then you jump into the market. So you see the color was blue here until it gets to red, right? And after that, you see the color match. Remember, this HMA is still blue. So then you put up your buy position here. Buy position at the close of that candle. Where is your stop loss this time? Your stop loss this time is going to be here, because this is the if this is the trade we are taking, then your stop loss is still down here, because this is the last known support level or swing low. Okay, And where is your take profit? For our take profit, we need to zoom out a little bit to find out where it is. So zoom out a little bit and see if you can find. Okay. Right, so if this is our trade, let's zoom out a little bit more. Right, so if this is our trade level, this is our stop loss. Sorry, this is our stop loss here, and this is our trade here. This is our stop loss, and this is our target. This is our initial. That's the first known resistance level here. So let's zoom back to our trade. Right. Will you agree with me that this is not a good trade to take? Why? Check out what the stop loss is. $378 pips against a profit of 113 pips. So you have the ratio is pretty bad here. You have 113 of a profit and over 300 of a stop loss. So risk reward ratio for this trade is bad, so I wouldn't take that trade. Okay, just because the risk reward is bad. Now we move on to the next. So this is the trade. This is a trade we are looking at. So you look for the next trade. So we have red, and then we move to the next trade here. Okay, so when we move to the next trade here, our options has got better because this is now our support level. So our stop loss for this new trade will be here. So the new trade we are trading now is this blue candle here. So it will be blue candle here. That's our stop loss. Our target still remain the same because we haven't taken out that resistance yet. So this is still our target. Well, this trade also is not the best, but it is better than the previous one. So if you are a conservative person, you will not take this trade. But if you are aggressive, you want to trade a little bit more, you will take this trade. And it means you will risk about 141 pips for a profit of about 86 pips. So you see that you did make your 86 pips anyway. The stop loss was not reached. Yeah, so you say you are successful, but should in case you lose that trade, you will have lost more than you are planning to gain. That's why conservative people or traders will ignore this trade, but the aggressive trader will take it anyway. So let's move on to the next trade. So we have taken this trade, we have taken that trade. So we are looking for the next trade. The next trade is here. Okay. All right. So you can see here that the color here has changed, and we cannot take this trade anymore. So we are looking now to sell from here. So here we are going to sell from here, and our stop loss this time. Our stop loss this time will be just above the swing high, and our take profit is the last known support level, which is here. Right, so in this occasion, we'll see that our profit level was not touched, but our stop loss was touched. So we will lose this particular trade. This sell trade is a loss. Okay, the reason why that is so is because the potential profit, this is a potential stop loss, $149 pips against a profit target of $304 pips. So anyone would take that trade. So unfortunately, it didn't work out, so you lose that trade and move on to the next signal. So all along here, there are no longer signals until color change again to blue, and you have the blue candles here, and then reversal candle with red, and then we got another color match, so blue and blue. So now we go trade at the close of this candle here. Our stop loss this time will be exactly where it is now, because this is a swing low before we move up. This is the last swing low. And where is our target? We have to zoom out to see if we can find a target. So if this is our trade, that's our stop loss. Where could it be our target? We could put our target at this area here, because this is a resistance level there. Okay, so if we zoom in again, all right. So with this, I will say yes, this is a good trade to take, because this is reward risk ratio is good. This is the risk for us here is about 123 pips, and the reward is about 212 pips. So that's about 2 to 1. As you can see, we hit our profit target over here, right? So we have taken, I think, 3 or 4 trades. We have 3 winners and 1 loser. We believe that from here up to this point, we have made substantial pips. And now what we are waiting for, so now we have color match, but we are waiting for this red candle to close, and that is today. Today is the 3rd of August 2017. Okay, so when this candle closes at red, we'll see what happens tomorrow. If we have a blue color tomorrow, that signifies that we need to go and buy, because the color of the HMA still stay blue, but we have gone to red and back again to blue Heiken Ashi color, so we will go buy. But tomorrow, if the candle closes red again, we will wait until we see what HMA 50 does. So guys, that is the strategy in a nutshell. It is very simple. Watch out for the matching colors. Only trade when the color match. So you wait for the color to reverse and then match each other again, then you pull the trigger. So this is Euro USD. I can show you USD JPY. Similar scenario. This is HMA 50, right? And that is the Heiken Ashi. You can see all over here you can only buy, all over here you can sell, all over here you can buy, all over here you can sell. So let's look at this last opportunity here. So you will see the red color matches each other until there's a reversal here, and after the reversal you will put in your, this is a reversal, and after that you have a red candle which matches the HMA. So when the HMA and the Heiken Ashi color matches, then you put your sell order. So now you are selling at this level, and your stop loss will be above this resistance, the last known resistance level, just above here, and your profit will be somewhere around here. So let's try that. So your profit, let's try first for your stop loss is over there, and your profit is somewhere, not to be too greedy, is somewhere around there. Okay, so this is where your profit levels is, and this is your stop loss. So let's see risk reward ratio to this one. Risk is 116 pips, and the reward is 180 pips. This is a good trade to take as well. So you see, this strategy gives you opportunity to go and join a very strong trend. Hope this is you understand how this works. Let's give it a go. Give me a comment if you tried it out, and if you find it very useful. I believe you could try 4 hours as well, but I recommend using a longer time frame. You can use some other little time frame, 5 minutes for scalping, 15 minutes, 30 minutes for short term, and 1 day, a weekly chart for long term trading. But for this strategy, a day chart will be ideal. Try out lower time frame and see how it goes. Guys, hope it's been good listening. Hope you have enjoyed it. I've enjoyed presenting it, and I hope you find it useful. Okay, thank you for watching. Make your comments, and guys, subscribe to the channel. As I said earlier, if you need this HMA indicator, I can supply you. I can give it to you free of charge. Send me your email address. I'll send it to you. As well, I have made a template. Okay, I've made a template for this strategy. So I've made a template. The template does not include these lines. These lines are just to identify the levels. So the template will look like this if you apply it to your chart. So if you want your chart to look exactly like mine, I've made a template for it. So you can send me your email. I'll send you the template as well, because I've made a little color change adjustment to the HMA indicator by itself, so that automatically you get this color. So if you need it, send me email and I will send it to you. Alright, thanks for watching, guys. Talk to you later. So bye for now. Starry.